Good afternoon, everyone. Let's just give it one more minute for people to join, and then we'll get started. Thank you for your patience. All right. Good afternoon again, everyone, and welcome. On behalf of the Global Climate Finance Center, it is a pleasure to welcome you to episode 3 of our webinar series on financing the water transition, delivered in partnership with ADGM Academy. For those who have joined us throughout the series, welcome back. And for those joining us for the very first time, a very warm welcome. As many of you know, this year's webinar series sits under GCFC mandate from the Ministry of Foreign Affairs to support the finance track ahead of the United Nations Water Conference 2026 that will happen later this year in the UAE. This work also builds on GCFC broader efforts to advance the water finance agenda, including the publication of our water finance framework, which was developed to help identify pathways for mobilizing capital towards water security and water resilience, and it is available on our website. In parallel, later this year, GCFC will also deliver its climate investment training program, the first of its kind in the region, in partnership with the NYU Abu Dhabi Stern School of Business and ADGM Academy, bringing together senior representatives from across the climate finance ecosystem for an in-person 4-day program focused on climate investment, capital mobilization, and financing solutions for emerging markets. So together, these initiatives reflect GCFC's broader commitment to supporting practical climate finance solutions while contributing to making the UAE a global climate finance hub. Now, back to our series. As you know, over the past 2 episodes, we explored the role of innovation and technology in addressing water challenges, as well as the financing instruments available to mobilize capital for water infrastructure. Today's discussion moves one step further, focusing on how countries can translate ambition into implementation through country water compacts and national investment platforms. We are delighted to be joined today by distinguished speakers from CIF, the Children Investment Fund Foundation, Sanitation and Water for All, and Water.org, who will share their perspective and also their practical experience from across different regions and different initiatives. So before we begin, I would like to thank our speakers and moderator for joining us today and also for contributing to this important and timely discussion. Just as a reminder, we encourage participants to use the Q&A function throughout the session. You have it at the top of your screen, and we will do our best to address as many questions as possible during the discussion. And with that, I'm pleased to hand over to Ghanem from ADGM Academy for a few more welcoming words so that then we can start. So Ghanem, over to you.
Thank you, Sarah. Good afternoon, guests, colleagues, and partners. It is a pleasure to welcome you today on behalf of ADGM Academy to another important session in Season 2 of the Financing the Water Transition webinar series, delivered in collaboration with the Global Climate Finance Center. Today's discussion comes at an important moment as countries prepare for the United Nations Water Conference 2026. Water security is increasingly recognized not only as an environmental and infrastructure priority, but also as a financial and economic challenge. This session will focus on country water compacts and national investment platform. These are important tools for aligning national priorities with investment opportunities, strengthening the project pipeline and capital. At ADGM Academy, we are pleased to support this dialogue by bringing together policymakers, financial institutes, and industry leaders to explore practical and scalable approaches to financing the water transition. I would like also to remind all participants, for those who are attending all sessions in this series, will receive an official certificate of attendance issued by ADGM Academy. Thank you to our partners at GCFC, our speakers, and everyone joining us today. With that, let us begin.
Thank you, Ganem. Then, Richard, the floor is yours.
Thank you very much, everyone. I'm very excited to attend this webinar today. And my name is Richard Matikanya. I'm the Deputy Executive Director for Africa at the Children's Investment Fund Foundation. I'm also the lead for water, sanitation and hygiene at CIF. And I'm joined today in the discussions that I'll be moderating and really looking forward also to your Q&A. Firstly, by Muyata Sitali. He is the CEO, the acting CEO of Sanitation and Water for All. And SWA essentially mobilizes global leaders to prioritize water and sanitation as a fundamental human right, ensuring lasting change through strong governance and accountability. And for SWA, the core program they use to achieve this is the Heads of State initiatives. That forms a core part of the program. So welcome, Sitali, to the conversation. I'm also very pleased to welcome Gary White. And Gary is the CEO of water.org. And water.org was established very much to also address issues of water. And it's particularly focused on helping people living in poverty access safe water and sanitation by removing the financing barriers. And rather than really building infrastructure itself, what water.org does is that using its flagship model, water credit, they use grant funding as catalytic capital and provides technical assistance to partners to then onward lend to people living in poverty to be able to then improve household access to safe water and sanitation. And for all of you who are very keen on water, I would urge you to read a book that Gary and Mate Damon have published called The Worth of Water. So very exciting, and I'll be quite pleased to share a link if any of you want to take a look at it. So the conversations today is really focusing around water compacts and water platforms. And I just wanted to set the scene by quickly defining what we see as a water compact and nationally owned investment platform. So a water compact can best be understood as a government-owned agreement or action plan that sets out a country's priority water wash reforms, institutional strengthening commitments, the investment pipeline, the financing pathway, and delivery and accountability targets. And then its counterpart is really then the country platform. And what the country platform then does is really the delivery and coordination mechanism. And its specific role is to bring together government, multilateral development banks, donors, utilities, private finance, civil society, and implementers to execute, track, and unblock delivery of all of the commitments that have been set out in water compacts. So with that early definition, I just wanted to quickly get into some of the questions and conversations with my colleagues. And I'm going to start off with you, Miatwa, in terms of, we know that many countries now have strategies, they have plans, and they have these financing commitments, yet implementation often lags. In your experience, Sitali, what distinguishes a country water compact that actually drives delivery from one that remains largely a coordination document?
Yes, thank you so much, Richard. I truly appreciate the opportunity to join you today. And I would also like, in the same vein, to appreciate GCFC as well as ADGM Academy in putting up this really fantastic series of webinars, of which today is the last of 3. And as we heard, this is not the end, expecting another season to come. So this is really good and extremely timely in this year 2026 because of the several things that we're seeing that together are generating significant momentum for the water and sanitation sector. The launch of Water Forward by the World Bank and MDB, supported by all of us in the sector, really identifying Water Forward as a core coalescing rallying call for the sector to achieve water security for 1 billion people just a few weeks ago is a significant moment. We also have this year the UN Water Conference at the end of the year. We're building this momentum off of ongoing, really exciting opportunities. The G20, the last two G20s, also having had some focus on water, which is unprecedented in a way. And within sanitation and water for all, we also have been working with several countries to elevate water and sanitation at the level of head of state. In Africa, the Africa Union Water Vision. Latin America, just having had Latino Sun a couple weeks ago. So there's really good momentum that is out there, and we need to see this as creating a shift in how the world views water, not as a sector issue, but as a development, economic, and climate priority. Water security also underpinning economic growth, food systems, public health, climate resilience, and social stability. So these are really good opportunities. Now, you ask a fantastic question to start with. There are a lot of strategies, a lot of plans. In fact, I have just in front of me here the global analysis of drinking water and sanitation done by WHO and UNICEF, and they produced a report just recently, which really shows that most countries now have water and sanitation policies, plans, and designated institutions in place. Yet fewer than one in 5 countries report having sufficient financing to achieve their national targets, and almost 2/3 report overlapping institutional mandates and responsibilities. So in other words, the challenge is increasingly not planning, but implementation, but coordination, as well as the political leadership and continued momentum to get these things in place. And Richard, you really set up this very well, defining or highlighting what the compact is, and then talking about that country platform that can help as an engine. So I'll speak to 3 things that I think are critical in this process in terms of getting success from plans to action to results. First, it is important that these compacts and that national country platform is backed by political leadership, and that political leadership should also be consistent. It can't be a sort of a seasonal, periodic political leadership. It has to be consistent from onset to getting to results. And this is very crucial for reforms, because with reforms, you would like to ensure not just that they cover a wide range of the issues, but also that they are deep enough and that they are consistently being monitored. So one thing that's really important is that a strong political leadership from the onset and a continuous engagement in implementation. And this could be done in the form of the president or prime minister or minister of finance. I think these 3 being really critical key pillars in this process, to partner with ministers that are responsible for water and sanitation to take this forward. And this political leadership forms the ownership that is required, the country-led component that you mentioned of these compacts getting to be achieved. So that national ownership is really crucial. And this helps to also break the silos across a number of issues to create a whole of government response, and also to mobilize all the partners that are required. Number two is to really focus on a number of relevant and transformative reforms rather than trying to do everything. Because yes, there are a lot of priorities, but in trying to do everything all at once, that could actually create a diffusion of the vision. And so it is important that in achieving these country-led, nationally owned processes, that together partners, the government working with their partners, identify what are those transformative reforms that actually can unlock the bottlenecks and get the progress that is required. And countries that try to do everything really tend to have difficulties in having traction across most of those areas. And so identifying what the key bottlenecks are and working on those, it might be financing, institutional coordination, climate resilience, utility performance or service delivery, and aligning stakeholders around those is really crucial. Number three, establishing a process for tracking results, for review, for tracking, and for coming back to do course correction. So one of the most interesting findings from the report that I just mentioned at the beginning is that countries conducting regular sector reviews, this could happen in the context of the country platforms you mentioned. So countries that are doing regular sector reviews and using data for decision making tend to have stronger implementation systems. And yet what we see is that many reviews reviews remain irregular, and many countries still monitor service coverage more effectively than they monitor governance, financing, and institutional performance. So in this process of implementing these compacts, it is really important to have regular reviews, but also to monitor progress across both coverage issues as well as inputs that are critical, such as governance, financing, and institutional reforms. So I'll end at this point with really just a final note that countries, we see a lot of plans. What they need now is stronger systems to implement these plans, and these compacts can come in to really generate that step change that is required. Thank you so much.
Great. Thank you very much for your perspective of that. And I think for me, I take away three things. I think firstly is consistent political leadership from day one. Secondly is very clear set eye on what reforms are needed to really transform the sector, to translate that into final wash delivery. And I think as you were speaking, the word that came to mind is do not boil the ocean. It's a water pun, but I'm sure it makes sense that we need to really focus on what are the core reforms that are actually needed. And then I think you talked very clearly also about a process for just tracking those commitments and being able to hold stakeholders to account. So thank you very much, I think, in terms of that introduction and the need to monitor and track. And I wanted to get to you, Gary. Yes, we have a compact in place. It's there, but a lot of these compacts, one of the things that I've clearly seen from many that I've realized is really about a financing gap. They always talk about putting together the financing that's really needed to be able to address water gaps. And I know you have some experience in that area. And we often talk about a financing gap in water, Gary, but in many countries, the challenge is also converting available capital into investable opportunities. From your perspective, how can country water compacts and these platforms help bridge that gap?
Great, thank you. Thank you for the question, Richard, and thank you to GCFC and also to ADGM for bringing us together today. There's been a real commitment on the part of both of those organizations to drive more action on water and sanitation access. I think what we're looking at from the compact perspective is how can we contribute to getting more money moving, and I think that's key to this, and how we can play into that and how we can support the compacts, I think requires a step back. And I think what we're looking at water.org and also Water Equity, our asset manager, is just that. Looking, what are these replicable financial models that will allow capital to move better and faster? And I know the GCFC framework is all about that as well. I think what we've been seeing the potential of in terms of moving money is the potential for what we call bottom-up financing. And what we know is that, poor households in low and middle income countries are already spending to secure water. They're spending in terms of their time, they're spending cash with water vendors, they're spending in terms of their health. These coping costs come to about more than $200 billion a year that is already kind of circulating, where people living in poverty are just trying to get by day to day and securing water. And so what we're doing with Water Credit at water.org is providing the technical assistance to financial institutions around the world so that they can start lending to those households. That technical assistance is freeing up billions of dollars of capital. This year alone, we have a network of over 200 financial partners around the world. This year alone, they'll lend about $1.1 billion to poor households, and that'll catalyze water and sanitation services to over 11 million people. So that allows investors like Water Equity to invest in those financial institutions and provide financial returns to investors. But more importantly, of the $8 billion that this model has mobilized already, about $7 billion of that has come from local capital within the countries where these operations are. So we're able to also draw in already that type of capital. And so between private equity and private debt investors globally, as well as local capital markets, there's a lot to be done, a lot of money that is moving and a lot more that could be moving. And, we're grateful for those types of TA funders as well as investors. For instance, First Abu Dhabi Bank is committed to investing in one of the water equity funds. So it's all about last mile access and also about leveraging financing. So from the country compact perspective, this model is up and running. It's moving a lot of capital, and we see the potential to work with the country compacts to bring more of that technical assistance into the picture. So both countries where we're operating now, which are spread around the globe, but new countries with their compacts, do they want to try to tap into this bottom-up capital? And we're there to provide the technical assistance and the support and the backstopping to help them to do that. In addition, I think we're looking at how do we bring more institutional capital into water and sanitation financing. That's always been a challenge. We still need to have blended finance models. We still need concessionary capital in the picture to get this to happen. We're partnering with the World Bank Group right now too, particularly the IFC, to develop a series of water bonds that will drive multiple issuances in the hundreds of millions of dollars into this bottom-up financing direction. So that, as I said, is going to draw on some catalytic capital to be able to do that, and getting the capital stack right to be able to move really hundreds of millions and eventually billions of dollars into this. We're also working on blue bonds in Peru. We worked with COFIDE there to develop over $50 million in blue bonds that have been raised on the local capital markets. And now we're also developing those types of bonds with India and Bangladesh. So working with countries within the frameworks that exist, looking to public-private partnerships with infrastructure. We're working on that as well. And so I think that's really what we see the need for, as Muyatwa really set the table well with some of the things that need to happen from the government, the regulatory, and the enabling environment, making sure that the regulatory framework around finance is there. I know in Ethiopia, for instance, the One Water National Program really encourages financial institutions to lend for WASH, but there hasn't been a lot of guidance issued to those institutions as to how to get that done. So it's not happening at the scale that it can. So I think working with partners locally on the ground with the regulatory framework, with governments, with the compacts, to really shine the light on this bottom-up financing potential. We have a goal before 2030 to move an additional $8 billion and reach 100 million people through this framework. And we have a lot of partners on board already that are going to be supporting that, both with TA and also investing the capital needed to move that money. So I think, what I'd like to say is we get water done on the ground, and we work with partners to move the money to make sure that it happens for millions of people.
Thanks for that response, and I think for laying out clearly that it's really about the appropriate capital stack. It's really about ensuring that there's sufficient capacity on the ground to be able to move that stack once it's actually made available, and then also ensuring that there's an appropriate regulatory environment. So just a quick one back to you, Sitali, around that. And I know Horsey has, that initiative has really helped to identify these reforms. So just a quick one, just in terms of what do you think are the challenges in terms of helping governments develop the reforms that then make capital wants to flow in water?
Great, thank you. So there are a number of challenges, and I have in front of me a slide that we've used because the first country to have developed a water and sanitation compact in the context of the partnership in which I work was Ghana. And they did this in 2010. It was a ministerial compact, covered a number of ministries. And then we had another country that did a compact, which was Liberia. They elevated it to the head of state level. And since then, we've seen a lot more countries do that at the level of head of state. And now we have a lot more countries that also have got compacts that are done across several ministries, which is really a welcome momentum, really providing very good foundation for getting action on these reforms. But we asked some of these countries a few years back, what are some of the pitfalls that you've seen in this process? And so I'll mention some of the pitfalls that were mentioned. Number one was failing to build consensus from the onset on the process and the milestones that were needed to be achieved across the way. So if those milestones or the reforms that need to be achieved are not properly defined, and if they are not smart, that also becomes a problem, because there can be an endless, there could be a target without an end date, right? So if it is sort of something that you have no idea when it's going to end, it's not smart in that sense, then you would have difficulties to actually figure out, to get the speed that you need, because in addition to scale, we also need sustainability. We also need speed. So this point about failing to build consensus was emerged clearly. The second one was failing to undertake a detailed review and analysis of relevant national policies and plans, so that you are able to identify from those national policies and plans where the gaps are, and where then you could make these critical changes that give you the leap you're looking for. And then the third was failing to hold a preparatory and really inclusive conversations with the key stakeholders. So if this was happening under the shelter of just one ministry and it's not engaging with the other stakeholders, by the time you're taking it to other senior leaders, maybe in cabinet or in other places, you may have lost some of the critical supporters in that process. So to a finance minister, to a sector minister who's keen to do this, political will is very important, but also doing that well to make sure that in the political economy you're engaging the right actors. That's important. Number 4 and 5, which I'll be very quick, failing to secure investment of senior staff from other institutions, and number 5, failing to secure commitment of lead government institutions. So in getting these reforms to happen, that involvement of key actors, basing that on data, and ensuring that there is political support on an ongoing basis is very crucial. Finally, guaranteed resourcing in the sense of the government needs to provide some resources to get the action to happen, but that resource cannot be sort of one-off. It needs to be included in the budget so that these reforms are truly nationally owned. So getting this to be part of that national budget in thinking about the hardware as well as the software of what you need to get the results done. Thank you very much.
Thank you very much, Sitali there. And I think you've inadvertently answered also the question I was going to ask you, because I was going to say, if a minister of finance or a president, out there, let's say in Latin America, they haven't done a compact before, and they were to ask you just what are for you just the 3 key ingredients that would make a real compact work, what would those be? So it's just a quick question, really, in terms of everything that you've outlined there. What do you see as potentially 3-4 ingredients that are actually important that need to be in place from the beginning for it to succeed? Yeah.
Fantastic. Government leadership and ownership. We've seen that in Dominican Republic. They did a pacto in 2023 that has been supported by the head of state, and they're achieving fantastic results in financing domestically, but also in delivering results and also reaching out to other sectors such as tourism. So government leadership and ownership, extremely important. The involvement and that also, the receptive policy environment. That can be an outcome of this government leadership and ownership, but sometimes we assume that just because the minister has said X, that the entire policy environment actually is going to follow through. To get the whole of government response, to bring all the other partners together, requires really more work around making this policy environment more receptive and inclusive. And then number 3 is the guaranteed resourcing as well as involvement of critical stakeholders. Even a fully willing government putting most of the resources they have, the challenges we have are just too huge for them to be achieved in these 3-4 years before 2030. So you will need partners, and partners do need to come along, and therefore guaranteeing the resources, but also bringing in the critical stakeholders, extremely important. Thank you very much.
Sure. Great question. And I wanted to ask both of you, and it'll depend on who else is best able to answer. I hope I've gotten his name right. Is it Aravind? Aravind has asked a great question, and his question is that, given the World Bank's focus on water, are there learnings from your experiences where ODA, philanthropy, and commercial capital come together?
Yeah, I can jump in on that to start, and I think that's exactly what's happening with us and our partners. So we're working with philanthropists, we're working with foundations, corporations, and governments to be able to bring that philanthropic capital in, that concessionary capital, if you will, that's needed to unlock the markets. And that capital comes in the form of the technical assistance. So we help local financial institutions basically do the market research around water and sanitation. We help them, hire the staff with WASH expertise. We help them develop loan portfolios and products in water and sanitation, so people can then go to those local microfinance banks and get the solutions that are best for them. And I think that's key to this, is it's helping unlock that capital at the household level so that they can do that. So a household might be getting a loan for a water connection, which actually then, because of that, they become a paying customer to the utility. So the utility actually has more financial resilience as more people connect and become ratepayers. They're buying, rainwater harvesting systems. They're building toilets, and so all of that technical assistance capital that comes in to help the this network of 200 financial institutions around the world basically tap into the local capital markets to then unleash that. So that's what we see. The demand is there, the market is there, people are already paying for water. It's just a matter of getting the financial institutions in place and understanding that this is actually a good business for them to lend and scale up their efforts. So what we're really trying to do is use that concessionary capital. We have partners like Starbucks and Ecolab and Microsoft and Caterpillar and multiple foundations and individuals that are providing that type of capital that's really necessary, but they're doing it because they want to unlock more capital. So every dollar that we bring in of philanthropy unleashes more than $20 of capital from the capital markets to be able to feed into this. So I think it's important for us to look at the sector, to look at where there's shortcomings, look at where the policies needs to change, but we can't, be wringing our hands saying all of these things have to be perfect before we can have impact. And I think that's what we're looking at with the models that we're doing. We're saying we're just going to work with the system the way it is for now until reforms can happen. And even working within the system means you can still reach, hundreds of millions of people with water and sanitation from the bottom up, getting the solutions that they see are best for them. And I think the key to this is that, it's very much a demand-driven model. No one's going to take out a loan at the household level for something that they don't want. And so it's going to be inherently more sustainable when they do that. And these loans are repaid at a rate of 98%. So that tells you also that they're affordable and that people are able to derive real household economic benefit out of having access to water to be able to repay those loans.
Sure. Thank you for that response. I don't know, Sitali, if you wanted to add anything to that response, to that question.
I think Gary has covered it quite well, but perhaps the one or two things that I would like to say is one of the important lessons in this conversation, especially in the light of what has been happening with ODA, is that no single source of finance will close the water financing gap. So public finance, ODA, whatever is remained of it, philanthropy and commercial capital, each have got a distinct comparative advantage that they bring to the conversation. And so the question is, how do you mix these to ensure that you get the results that you need? And that really comes back to that government ownership and leadership, and the confidence that can be created by a really good focus on the reforms that create the confidence for other players to come in and to do so in a cost-effective way and in a way that can generate speed, scale, and sustainability. Now, some of the examples that I have heard, but I think it's worth exploring a bit more. Rwanda, the Kigali bulk water PPP, which of course was enabled through government leadership. It had some concessional finance. There were private developers and also commercial lenders in there, and also some other examples in Kenya and in other places. I think you could see a blend of these factors coming together. And I think what is the challenge now looking forward is how governments can work with partners to actually create these options that maximize the advantages of all these unique financing options. And for that, some technical assistance might also be needed, not just to create how that would work, but also to see that the implementation also works very well. I think I'm saying this because one of the worries is that you could focus a lot more on the capital expenditures and creating the capital assets, and then forget about the software, forget about the operating and maintenance, forget about the technical assistance that is actually just needed to get this enabling environment to be in place. So I think there has to be investments on all sides to make this successful. Thank you.
Thank you very much for that. I would also just add, I think, Aravind, that recently, a few days ago, actually, on the 9th of June, the Global Climate Finance Center, in partnership with WaterAid, actually launched the Water Finance Framework. And What that framework does, Aravind, is really lay out a very practical decision support tool in terms of how capital is classified, structured, and deployed across the water sector. So it can help depending on the opportunity for whether it's a private sector organization, whether it's a bilateral donor, whether it's philanthropy. Think about where that stack should be deployed, provide some real good support around that. So I'd urge you, and I'd urge everyone who's here, who's not had an opportunity also to see that framework, to take a look. I found it already very useful working in philanthropy in terms of helping us think through very practically how that question you've asked, Aravind, can all come together. I'm also conscious of time. I know we're at 2 minutes. I just also wanted to check if there was anyone else who's attending this webinar today who has some questions for our panelists. Henna, can you come in and ask your question? And if you're asking a question, we can't hear you. You're muted. Well, but please go on and ask.
I guess that's because my mic for participants, it doesn't work. So Anna, if you can just type it in the Q&A box or in the chat. Thank you, Richard.
Richard, you're on mute.
Great. So as Hannah types her question, I just have one question for you both, and it's the same one. We are seeing unprecedented momentum, I think, as you already laid out very clearly, Sitali, and similarly, Gary, through, when you start thinking of the year of WASH, Water Forward, the upcoming conference that our colleagues in the UAE and Senegal are co-hosting in Abu Dhabi. How do we ensure this momentum translates into measurable improvements in services rather than additional commitments and announcements?
That's a great question, for sure, Richard. I think a lot of times these proclamations are made and commitments are made to commit sometimes, right? And I think what we're doing, we're putting in place partnerships with multiple entities that are coming together to be able to announce a financing platform that is already delivering results on the ground, but also has the financing committed going forward for multiple years. So what we're trying to put together is, basically a plan with these partners to reach 100 million people by 2030 with both bottom-up financing and top-down. And so I think that's key, showing up with the money already committed, and then a commitment to also to reach a certain number of people, and then measuring yourself and reporting back in a very transparent way.
Thank you. And Miato, before you start, maybe Hannah's just shared her question, and before we just close off, she's just asked, she's thanking you for the valid points you've made, and she mentions that she's experienced them at AWS, and her question to you is, can you elaborate more on what you see as the role of the Big Four? And having worked in the Big Four, KPMG, Pricewaterhouse, Deloitte, Ernst & Young, what do you see as the role of consultants in supporting as transformative partners in terms of global water financing?
Thanks. That's a really good and big question. And I think it would be great if, Richard, you could also add your own perspectives to this. But I think increasingly what we're seeing is not necessarily the lack of knowledge at the moment or the lack of plans as indicated. I think it's so much the will to identify the right reforms and get to work on those. And I often talk about some of the areas where, for example, you do need to make some small adjustments, for example, to tariffs. And I'm just picking this as an example. I could pick many examples. Sometimes it's not the political will to, sometimes the problem is the political will to charge, right, to make the right tariff. That is difficult, whereas people might be looking for the right resource and service level. The political side might be having difficulties. So just identifying what the right type of intervention is and working with the different stakeholders to create the optimum level of interventions that are required from the different types of stakeholders. I think one of the key issues perhaps that the Big Four might be helpful on is you have a number of countries that are struggling with debt sustainability. And so they might be looking to how they could do this in a sustainable way in blending their existing national resources plus also other types of sources. So figuring out the right balance there, that would be good. And in some places, it's also how do you get the solutions that are really relevant for the most difficult challenges that are there. And perhaps some of those answers might not come from the Big Four, but these are some of the questions that the government are also asking. Richard, I think we can also rely on some of your own experience here to provide some additional insights. Thank you very much.
Sure. Gary, if you could do something in 30 seconds, I'm just aware of our hosts and everyone's commitment in terms of time, and then I can just potentially just sign it off quickly.
Yeah, I think that's important to look at where those consultants or project developers are. I think as project development companies, those are kind of consultants that are helping get projects developed that are actually investable. We've created Water Connect as a project development company to work with other developers. In fact, we're working on the Naivasha bulk water system right now, helping develop that project to get it to bankability. And then that also allows Water Equity as an investor to invest in that infrastructure. So what we've raised over about $500 million in capital across different investors that's ready to go to invest in those types of infrastructure projects and in that bottom-up financing. So I think, what we're seeing, we have a lot of on-ramps for philanthropists, for MDBs, for corporations to work today to get water delivered that last mile, while we also work on the reforms to make it a better platform for investors in the future.
Sure. And I guess for me, just one last word, and I think I've already written it there. I think for me, what I've seen now, if I put on my Big Four hat from a previous time, is just really implementation support in terms of being able to deliver the reforms and policies. Those are the ones that I think are most critical, and those are the ones that I think platforms have struggled to help countries think through in terms of how to make them work so that then there's a conducive environment for delivery. And then the second one, which I think also the finance framework clearly lays out, is just around structuring capital stacks. What's the appropriate capital stack for a particular water investment that needs to be done? Having said that, I think we are at time, and I just wanted to get back to thank both Sitali and Gary for participating. I wanted to quickly pass back now to Sarah and our colleagues.
Thank you, Richard, and many thanks to our speakers for a very insightful discussion, and to participants as well for your questions. So just to mention very quickly, so today's discussion and conversation highlighted that while financing is essential, unlocking investment at scale also requires coordination, clear priorities, and mechanism capable of translating ambition into implementation. So we heard valuable perspective on the role of country water compacts, the importance of developing investable pipelines, the opportunities that national investment platforms can create to bring together governments, development actors, financial institutions, and the private sector as well around common objectives. So as we look ahead to the United Nations Water Conference 2026 that will happen later this year in the UAE, discussions such as this one help move the conversation beyond identifying challenges and towards building practical pathways for delivery. As a reminder, this webinar series will continue with episode 4, our last one, first week of July, where we will focus on blended finance and investment structures and explore how different forms of capital can work together to accelerate investment in the water sector. Please also note that the recording of today's session will be uploaded to the GCFC YouTube channel, where you can also find all the previous episodes. And I'm gonna share the link with you here in the chat shortly so that you can access it. And that said, as with last year's series, participants attending the full webinar series will receive a certificate of participation from ADGM Academy. So thank you again for joining us today. Special thanks to our amazing speakers, moderator, and ADGM Academy. And we hope to see many of you at the next session. Thank you all.
Thank you, everyone. Take care.
Bye.
Thank you very much. Thank you.